Good morning and welcome to Leading Minds, Fund Business's new interactive industry discussion forum. My name is Wietske Blees, I'm editor at Fund Business, and I'll be chairing this morning's discussion on operational resilience under pressure, which is clearly very topical considering the current circumstances, and particularly in the investment industry, where not only have businesses had to deal with the COVID-related business continuity challenges that everyone's had to deal with, but market volatility and trade volumes have also spiked significantly. So to some extent, more work in extremely challenged conditions, a bit of a double whammy. This morning, we'll be talking about some of the challenges that have been presented and some of the solutions, so different ways in which firms can and have been streamlining operations in those circumstances to really minimize operational risk and increase efficiency. So we're joined by Linda Kaufman, Executive Vice President, Reference Data Utility at SmartStream Technologies, who's joining from New York, Ross Gulliford, Head of Investment Operations at Challenger in Sydney, and Rob Scott, Global Chief Operating Officer at First Sentier Investors, who's joining from Hong Kong. I'd also like to say a quick thanks to SmartStream Technologies, who are partnering with us on this session. Now, just to bear in mind, this is an interactive session. We very much encourage questions, so if you have any, you can ask them via the questions function on the platform or via email to events@fundbusiness.com.au. Now, just to start off and to set the scene, could you each provide a brief outline for your business and operational setup? So Ross, if we could start with you, can you tell us a bit about Challenger and how it's set up?
Sure. Good morning, everyone. So Challenger has two main division lines. We have a funds management business, which has a whole bunch of in-house funds management capabilities, as well as a range of boutique fund managers that we have ownership in. We distribute their products and we provide all support and administration services for. And we also have a life insurance business that's main focus is around guaranteed return products or annuities, as most people, retail product people know. For all of those businesses, all administration is done in-house by my team. So that includes all of your typical middle office, compliance, funds administration, unit pricing, investment analytics or performance and attribution. We only really outsource the custody aspect. So it's a very much an in-house model that we support. And we do that for all of our internal businesses and funds management businesses.
Great, thank you. Rob, what about First Sentier? Could you give us an overview of First Sentier Investors and its operational setup?
Yeah, sure. Morning, everyone. First Sentier Investors was known as Colonial First State Global Asset Management in Australia. Is still known as First State Investments overseas. That will be changing this year to be globally the one brand, being First Sentier Investors. That was off the back of us being sold by CBA to MUTB, Japanese bank. So we're basically a global, primarily equities, but also fixed income and multi-asset, long only fund manager, offices in Sydney, Hong Kong, Singapore, London, Edinburgh, and New York and Louisville, as well as some other sort of just pure distribution offices in some other locations. So when it comes, from an IT and data architecture point of view, we're pretty much got a single architecture globally, or we will be on that by the end of this year, after we sort of finish transitioning ourselves from CBA and data architecture. And then from an ops point of view, investment ops point of view, all of our back office and custody is outsourced to a range of providers globally, depending on the domiciliation of the funds. And then for middle office, we still do sort of trade processing and those sorts of functions in-house. But when it comes to record keeping, etc., that's outsourced to CFSIL.
Great. And Linda, what can you tell us a bit about SmartStream Technologies and how you fit into the picture?
Yes. Hi. Hello, everyone. So RTU is a business unit of SmartStream Technologies, and we are a reference data utility service that provides data content in combination with managed services. So a good portion of our staff is dedicated to our operations teams, both technical and data operations, who really focus on making sure that the data is correct and being sourced and maintained and delivered. under pretty challenging SLAs. So typically we're delivering to your security master trade lifecycle type business case, and also for regulatory reporting. So those are our two main typical business cases. There's a couple outside of that realm, but generally that's where those are the teams that we're supporting. So there's a large dependency and partnership with our clients to really be able to be part of the run the bank activities and ensure the data that's coming to them is of highest quality, so that they don't have to do that in-house. So a large part of our staff is dedicated to the operations piece of things regarding managed services, and then the rest is really developing all the functionality and technology around that.
Excellent, thank you very much. Now moving on to the situation of the past few months, clearly there's been extreme volatility. Trading volumes have increased greatly. At one stage, ASIC, the local market regulator, had to step in and tell a number of the brokers that they had to limit the number of trades that could be executed by up to 25%, because there was such a backlog of trades after Friday, the 13th of March, that it was putting too much pressure on the processing capabilities of market participants. Now, that's since been unwound again, but it shows quite clearly that there's been a significant increase in volumes in trades executed, and that was in part a reflection of the significant spike in volatility. Obviously, that's all happened at a time when the office, the trading floor, the traditional infrastructure was all off limits. So a very different operational setup from what you'd normally be running. Against that backdrop, what have been some of the key challenges that these recent conditions have presented to you? Rob, if I can start with you this time. What's been First Sentier's experience, and what have been the biggest challenges in recent months?
Yeah, look, clearly initially it was moving 100% of our staff to working from home within a short period of time. So we'd never, no matter how good your BCM plans were, we'd never tested for that. I don't think anyone had. So so making sure everyone, primarily from a technology point of view, including the PMs and traders, including ops, that still needed to, particularly when the volumes had increased, and the volatility increased, that they could all operate from home. So that was clearly the initial focus. And then once everyone was sort of working from home, then it was really around ensuring people could continue to perform BAU processes that had to be performed, with no sort of impact, from a delivery standpoint, and as well as a risk standpoint. And also just really keeping comms very clear, business-wide comms, making sure it was consistent and regular, so that everyone, so there was no conflicting messages going on within the business. We needed to make some quick decisions at the senior level, on how we would move forward, and really come together and make those decisions and move forward with those. And then eventually it was really just making sure the staff stayed connected, and obviously, motivated working from home. And a lot of staff had very challenging environments working from home, a lot of homeschooling going on, that certainly made it challenging if you had sort of 4 to 10-year-old kids, which has made for some interesting VCs over the last few months. And then there were, and then from a BAU point of view, things like for ops, mainly because of the volatility, we've certainly been running sort of daily evaluation committee meetings around security prices that have been used for unit pricing, etc. We've really focused on our supply management, to really keep an eye on, overseeing our suppliers, making sure none of their delivery drops off or they're under financial stress. So because supply management sits within my scope, then we've certainly had a focus on that. And then and projects is probably the other area. So some project timelines, we had to sort of reprioritize some of the the lower priority projects, and for the major projects, a couple of the timelines needed to be pushed out a little bit. But they've all continued now. Still intend to be delivered pretty much as they were planned to be delivered before COVID kicked in. So they're sort of the general areas that we've focused on as we've gone through this. Surprisingly, with little surprisingly touch wood with a pretty good result. Surprisingly, everyone's managed to still be able to perform their roles across the business with little additional risks coming off the back of that. So which is a recognition of I guess the controls and procedures, and also the IT infrastructure and applications that architecture that we have in place that enable us to do that.
Yeah, that's clearly a sign of a good setup. Ross, what's been your experience, and has it been different from Rob's, considering that you're more insourced?
There's a lot of similarities. Obviously, we have, like everyone, I think, moving to working from home has been a big challenge for everyone because of 100%. We've always encouraged people to have a good work-life balance, and encourage people to have already done working from home. But doing 100% was obviously a challenge. We had things like monitors and chairs walking out the door at the office. We recorded that, but it was interesting to see some people weren't properly set up. They wanted the 2 screens, they wanted all of that stuff. So just even some logistical stuff had to be sorted through in the first place. But that was handled incredibly well. Our IT guys got onto that early, even before we were in lockdown, and they'd already started that process. Our volumes, as you mentioned, our volumes went through the roof. Our record month was in March, and that led to a lot more pressure on my operations guys in processing transactions and unit pricing. Fortunately, we already have an experienced BA, business analyst team, made up of people who are experienced in the processing teams, and they're people who used to be managers or senior people within the processing teams. And probably fairly enough, a lot of the projects got slowed down during this period because people didn't have the time in other business units. And so the BAs were utilised to move back into the operations teams to provide that extra capacity. And that's worked incredibly well for us. And it allowed us to soak up that extra volume without placing undue risk and pressure on the current guys that are in the teams. I think our technology held up incredibly well. As Rob said, that's across the board for everyone. Of course, you get internet dropouts occasionally, but I think a lot of people were surprised at how well technology has handled this change. Use of systems like chat systems, we use a system called Jabber to do our chat internal. I think it was probably not used a great deal beforehand, and it had massive increased volumes during this time. People really became experts with Jabber and WebEx and Microsoft Teams and all that sort of stuff, to the point now where I think a lot of people are considering whether this is a longer term thing for them, being able to work a lot more from home. So that's certainly a positive that's come out of this, where people are a bit more broad-minded in the way that they think about their work-life balance. So that's a great thing. I think there's been a temptation also for managers who've got the experience to step in and solve problems very, very quickly. And we've tried to temper that a little bit. We want people to still go through the normal process, but we still need the visibility of being able to see what decisions they're making. And fortunately for us, our system is very dashboard centered and very alert based focused. So whilst we perform all functions within my team across about 70 staff, we're able to monitor that very well through the system. Our system's a front to back system, and we're able to monitor all aspects of the unit pricing process or the compliance process or whatever it might be, using dashboards and alerts to then monitor how things are progressing. And so that's been incredibly beneficial for us. Put a lot more reliance on us using those dashboards rather than getting up and walking over to somebody. But that's been really, really positive for us. Our communication has also ramped up. We've had the same as Rob. We've had daily meetings on the unit pricing process, on spread checks, on liquidity, making sure that we've got the right liquidity, making sure we're putting in the right spreads on the unitized funds, and that's been incredibly important. And those meetings were every single day with up to 30 people in the organisation on those meetings, from legal and compliance and operations and tax and every area included in that. And that's been incredibly successful and beneficial, and given senior managers a level of confidence in our process. So that's been really, really good. Probably the other challenge has been that body language plays such a massive part of communication. And when you're on the phone, even if you're seeing somebody's face, it's not the same as being in person, seeing how they react, how they sit and stand. So being able to interpret that has been difficult. And I think to cater that, like most people, we probably tend to over communicate and over check in with people, how you're going, catch ups, that sort of stuff, and really try to understand where people's heads are at and their emotions, and that's incredibly important, because we haven't been able to really see what people's personal situations are like, whether they're crammed in a shoebox unit without much ability to get out, or whether they've actually got a lot of human contact. So we've worked hard on trying to make sure we manage that as well.
Challenging on all fronts. Linda, trade volumes have gone through the roof. We've heard that from both Rob and Ross. What's been your experience and your clients' experience in terms of the challenges that this has presented?
Yeah, so I think circling back to a couple of things that Rob and Ross had mentioned, I think the whole concept of the roadmaps and whether they were shifting or not shifting, I think overall everybody was pretty happy with their initial BCP, right? That they things went okay. We had a couple firms that we deal with mention, maybe access or security issues, but very, very small blips, right? Overall, I think everybody did quite well. But what we found was that it was really helpful to communicate to our staff that the roadmap could be, if we had to, and knock on wood, so far we haven't had to shift our new functionality that we're developing. But I think it was important for the teams to understand that, BAU was our priority, and that there wasn't going to be that added pressure if it ended up that there were blips along the way, that they weren't going to have to manage both. So we found that just communicating that kind of made everybody relax a bit. And then to the point about longevity, I think everyone's BCP plans were pretty good, but nobody thought we'd be here for this long, right? So I think we're finding that, whether it be, I think it was Ross or someone mentioned about the, extra monitors or, desk chairs, depending on what part of the world you're in. It's just, I think everybody was in really good shape, and then all of a sudden stopped to say, okay, if I have to do this for the next 3 months, what does that look like for me? Am I going to be, in a relatively good shape? So I think the longevity has put, an extra twist on things. And I think maybe when we go back to, if we ever get to a sense of normalcy, I think when people are reevaluating the BCP plans, that may be another thing that they put into it, is this concept of, if we go beyond a certain amount of time, what does that look like? And then making sure that the staff understands that you have their back. As far as the volumes, which you just mentioned, we had some interesting listed derivatives. So we manage across asset classes. Listed derivatives is one of the asset classes that we provide data content and managed services around. And you always know that volatility, correlates to exceptions and correlates to client inquiries. But it's always nice to see numbers that support that. And so we consistently run metrics on our exceptions. And, we definitely saw that as the market volatility increased, the volume of data being managed, was increased. So the products in the listed derivative space, products didn't necessarily, the number of new products weren't coming out. However, contracts were exploding. And so, the new derivative contracts in February were, somewhere around 1.1 million. And in March, it was 2.3 million, which is, a huge difference. And so if you imagine all of that new data coming in now has to be run through all of the exception management processes that the firms have. And we really saw a very large number of, our exceptions definitely increased significantly, especially on that magic date that we all talk about, which is around the 13th, 14th of March. And so if you have a staff who is used to managing, 100,000 exceptions, and then all of a sudden they're managing 250,000 exceptions, it's got to take a toll somewhere. And so it was quite nice to see that for us, we felt like we dealt with that spike pretty well. And I think I would attribute that mainly because we have a lot of our exception management is digitized, and so it's not all people focused. Some of I'm not taking nothing away from my operations staff, especially if they're listening, because they have to manage all of that. But I think that our rule-based exception management definitely helped there. But we definitely saw a large spike. Going back to what Ross said about the volumes, it definitely impacts all of our operations through the whole trade life cycle.
Great, thank you, Linda. Rob, just to kind of pick up on that point, on these types of market conditions are exactly the times when you want your data to be accurate. The absolute last thing is you want to be dealing with that many exceptions in those circumstances. How has First Sentier dealt with these record volumes, managing the data and the order management, sort of that side of things?
Well, it's been pretty much, I mean, the controls and processes and IT applications architecture we had in place is already fairly automated. So we were able to deal with, and also the way we receive data today is we use a third-party provider to source all our data from the various data vendors, and then they disseminate that to us within our internal applications that the investment teams, traders, ops use. So we were able to manage that, pretty much as BAU. It was just really a case of, of managing the higher volumes was more of a, busier days, quite frankly. But no particular balls were dropped. So, I mean, probably because a lot of it was, we had third-party solutions, and it was, system-driven and interface-driven. We were still able to have our two, global order management systems, accurate, timely data. The way they execute trades, the way trades flow through to our middle and back office, is relatively automated. So, I guess the applications architecture and the operating model stood up even for those large volumes. So, without a doubt, there was some longer hours going on and some stress going on to try and deal with the increased volumes, but the operating model stood up okay.
All right, well, that's good. That's good. Just moving on in the interest of time, because we're also getting quite a few questions coming in, which is very good. Just moving on to vendors, how and processes internally, how have your vendors held up through all this? Have you had any issues with respect to the robustness of business continuity plans and the ability to maintain service levels, timeliness and data quality? Ross, what's been your experience?
Yeah, sure. I suppose from our point of view, the term BCP is probably a little bit misleading in the sense that our typical BCP, where the building is out or the communication centre is out, hasn't applied so much because people were able to move to home very quickly. And it, in a lot of senses, a normal BCP plan wasn't actually invoked. It was more a matter of actually BAU, but doing it from home. And with increased volumes and liquidity pressures, etc. But our communication with the vendors has been really, really good. Like, I think that they were very aware. I mean, obviously they were very aware of all the challenges and pressures that we were under, as well as every other fund manager out there. And I think that they responded well. There certainly were some challenges through this process where previously the low volatility markets and low liquidity hadn't really tested some of the processes in some of our vendors and even ourselves. And I think through this period, there was a few hiccups through that process. But the good thing is that people responded really well to it. So when things showed up and we were able to jump on that quite quickly, we were able to make decisions and work with our vendors to make decisions around what to do. And I think that was really important. The key was communication as always. But I think that we're able to do that and make them aware. It almost, I like to think of partners as our vendors as our partners. And if they're not partnered in with what we're trying to do, then they're not going to really understand it. So we usually try and give them a level of understanding of what we're trying to achieve so that they can get on board with it. And through that process, it's been really, really valuable and worked really well.
Oh, thanks, Ross. Rob, we've spoken about this before as well. Supplier management and vendor due diligence, it's something that you're very well across. How have you got anything that you've done in the past few years that you would say has worked particularly well in this particular recent time?
Have I got anything in the past that's worked well? I mean,
from your vendor due diligence and supplier management perspective.
Look, I think the vendors have held up pretty well throughout this. Similar experience to Ross. I know that certainly the ops vendors say had some challenges, certainly around the OTC derivatives volume. So I know there was some work going on in the back ends, particularly around some of the offshore centres, around how they dealt with some of the volumes, particularly around the more manual type transactions that they were managing, and that was across the board with the various vendors. And then obviously India was a bit of a concern there for a little while, where they'd never really fully tested everyone working from home in India. But there were lots of people moving functions to sort of nearshoring locations, to their European or US nearshoring locations. And even some staff that may have outsourced their functions a few years ago, getting back into processing stuff. So there were some fairly innovative ways that the service providers managed to continue delivering their services. And from our perspective, the standards, the service standards, never really dropped off. And similar to Ross, our vendors let us know pretty early on, even if there's a possibility of an issue. So, so from the governance has held up well. But as I say, as I said earlier on, we really just had a weekly check-in with the business owners of all the suppliers across, not just ops suppliers or IT suppliers, but across our whole business. Really have been running a dashboard just to confirm that from a supplier's point of view, everything's tracking okay, and that we could jump on any issues. And we're talking, I think, around 150 global vendors, global suppliers, and right as of this week, every one of those right at this week are all traveling at green at the moment. So it's certainly more heightened from a governance point of view, but generally tracking okay. So I think they've responded well and communicated well.
Great, thank you. Now, Linda, looking forward, if we look forward to things to improve, have you seen anything in the past few months, any areas or processes that can be improved, either within clients or from a technological perspective? I guess particularly around kind of streamlined and accurate data would be one area.
Yeah. So I think a couple of things. What we've seen, well, two things really. It's one of these things where you have the pandemic and you're wondering what's going to stick, right? So are we going to have certain things that we initiated during this phase that will stick, that we've realized, hey, this isn't so bad, or some silver linings that will continue. And I think to go back to, so this is not technology related, but to go back to some of the communications and with the vendors, and I think that some of the, I liked when I heard the word partnership. So we're finding that we have actually more of a intimate relationship with our clients, and so where everybody's much more comfortable now getting on video calls, for instance, and so where we would have communications at a typically say we have a monthly governance call, and it's a voice only call. Now all of a sudden everyone's so used to video calls that we're engaging with clients a bit more over video, and it just seems like the relationships and the partnership aspect of it is really kicked up a notch. And so I think that may stick for a while, and people may be a little bit more comfortable working under those circumstances. And then from a technology perspective, I mean, we've been very I think most data governance programs these days have a lot of lineage, metrics, focus. And if you're in this type of environment and you don't know what's coming next, what the next day is going to bring, I think it's really important to make sure that you have enough of those leading indicators so that you're not constantly reactive, that you're more proactive. So I see that I would think that in the future there may be some fallout from what we've experienced over the last couple months to drive a more focused on digitizing around exception management or part of your operational processes, so that you can kind of stay on top of things a little bit quicker from an automation perspective.
Great, thank you. Ross, have the past few months highlighted any areas or processes from your perspective that you think can be improved or that you'd like to keep an eye on?
Yeah, I think in the general day-to-day. So I think our processes, a bit like Rob, our OTC derivatives processes have probably come under the most amount of pressure, and I think we can continue to refine some of those processes and continue to refine the valuations, etc. But generally, they're pretty good. I think the bigger challenges, or not challenges, the bigger benefits that we can see around this is around our communication, use of technology such as WebEx, Jabber, people working from home. I think that's actually going to be the bigger benefit for us. I think our data and our processes around data in general has been quite robust, and the systems themselves handle that quite well. This whole COVID time is really, in my mind, much more about people and about the way that people have interacted and how they handle this sort of thing. And because the systems still run, they still work on the same platforms, there's high volumes and high pressures, but I think that's just how people react in this sort of situation. So that'll probably be more of our focus on that going forward.
Thank you. And Rob, it's obviously not all bad news. Necessity can also be the mother of good invention. Do you see anything where the current situation has enforced improvements that either might otherwise not have been made, or anything where you think that technology could play a better role going forward?
Yeah, I mean, I find myself saying, the benefit of COVID is, which every time I say it feels like a horrible thing to say, but certainly from a ops and IT point of view, a selfish ops and IT point of view, us all being forced to work from home 100% is going to drive some stuff through that we weren't going to be able to drive through necessarily unless we were forced to to work in this sort of situation. So things like, hopefully it's the death of the fax within our industry, and the need to print everything off, and some of those things have obviously been challenged within this environment, while we're still wanting people to still have controls and that still carry out the same controls and procedures we have in place today, and manage the risk appropriately. I mean, Ross has said it a couple of times, definitely collaboration tools, we've found it as well. I think, Teams, Jabber, Ross mentioned, a few of those other collaboration tools are clearly come to the forefront here, and we were struggling to get people to use it before. So and now they're getting used to it. So that's actually been helpful. Yeah, I talked about supplier management. We didn't necessarily have the business owners of each of those suppliers been actively involved in keeping an eye on their own suppliers, but we were able to force that to happen, and now they're used to having to take responsibility and keep an eye on the service delivery for the suppliers that they actually look after. So that's a really good outcome and helps our supply management team out, rather than just leaving it all for the supply management team guys to have to look after suppliers that technically the business owners should take more ownership for. Some of the sort of reporting that's been produced, if it didn't already exist before COVID, around product liquidity, counterparty risk, valuation committee, that process has definitely been taken on to another extent now off the back of this, to where it was before. Each time we have one of these crises, then things like the valuation process and really making sure that we're all comfortable about how we're pricing securities has definitely taken a leap forward as well. So all of these things we should, hopefully we can continue to have these in place, and actually more now. We're just looking to automate some of the reports that we've created manually off the back of needing those to deal with all the various risks across the business. BCP plans are going to have to be rethought through. Ross mentioned it earlier on. I mean, we haven't. We all had a pandemic scenario. Had we fully tested it, our alternative site, wasn't able to be used in this particular scenario. In fact, the alternative site we had in Sydney, within it was a commingled site fairly early on. Someone came down with someone had the virus that was actually in the premises, and therefore we weren't able to use it. And then it became, our office almost became the clean site. So that was something that we hadn't really planned for within our plans before. So there's lots of lessons learned there. The working from home going forward, obviously now it's clearly something that will be part of our way of working going forward, and just provides everyone a lot more optionality, from a family lifestyle point of view. So we've still got to all figure out how that's going to work moving forward. Probably need less office space. Hopefully the rentals will come down in CBD office space over this, and can we, we were thinking one of our offices was pretty full, and we're thinking of having to move to a larger office. Well, now we've put that on hold. We probably don't need to, because now we can work with some, having a certain percentage of people working from home. We've clearly been able to identify how interoperable our teams are across the different regions. So, making sure we're going to really sort of drive that through more, so that, we had to look at scenarios where, well, what happens if Singapore and Hong Kong go down? So previously we'd had Singapore cover Hong Kong, Hong Kong cover Singapore, but what if they both came down? So could, Europe and Australia cover that? So, and obviously vice versa. So a need to make sure that, to continue to drive through the global alignment of the way that we operate, is clearly something that has become more important and will continue to drive through. They're just some of the areas that I see as positive outcomes from a horrible situation.
So there are clearly a lot of positives for the future. Now, we've had a few questions come in, so I might just jump into those. I think the first one I'll throw to Ross. With the new working from home environment, was there a tendency by senior management to micromanage operational activities and people? Was there a trust issue? And then linked to that, a second question that's come in from someone who's interested to hear views on operational risk management with working from home, including client and trading confidentiality, insider trading, and fraud.
Okay, so maybe if I go to the first part around the micromanagement. I think naturally people are going to be a little bit more nervous when you move to this sort of situation. Doesn't matter who you are, and making sure that you're on top of all the deliverables that was the key thing. It wasn't so much trust level around people doing their work or not doing their work. I don't feel that that's really a concern. I don't walk around the office and make sure people are doing their work during the day, so I don't really have I don't have that need to do that from home either. So it wasn't so much around whether they're doing the job. It was just more around with the huge volumes and everything going on, and people's technology and internet and all that. Was everything getting done okay, and were people being supported? And I think that was probably the main thing. And for me as a senior manager, I pushed a lot of my other deliverables that were more strategic and longer term in nature. I just pushed those back, and of course my boss did the same, and most senior managers did the same. So our focus was pretty much on just supporting the guys, and I think that that worked quite well. Yes, we did get into probably a bit more detail than normal, but I think that was actually important because we needed to understand the liquidity, we needed to understand the volumes, and if that was creating unnecessary pressure or pressure on the teams that we could help assist with. So hopefully that answers that question. In regards to the risk side and trading, insider trading, no, not really. Like, everything is done on the systems. We have very robust systems that monitor the trading activity of all of our fund managers. People need to sign off if they're going to be doing self-trading. They need to get approval. There's lockout periods. All of that's technology driven, and whether you're sitting at home or whether you're sitting in the office, it doesn't really make a great deal of difference. We perform daily risk meetings in my team. The managers are responsible, and I have a weekly risk review with those managers around all the key risk indicators. We monitor that the same way that we did in the office, except we just do it over WebEx. And so all of those indicators were well managed, and we were able to stay on top of things by continuing that process and continuing that discipline that we've always had, just remotely. And I think that's been very successful.
Great, thank you. So we've had another question come in, and I think I'll throw that to Linda. Just in your dealings with clients, have you noticed that the events of recent months are triggering a sort of rethink on moving processes to outsource or to centralize data management services further?
We have, and we've experienced it, I think, in two ways. One, we've actually had some use cases where people are looking for almost like a backup BCP, right? So if they're outsourcing, and especially the smaller firms, right? If they're outsourcing, similar to what Rob and Ross were saying, like if one thing goes down, if one area goes down, what they're reevaluating what that effect would have. So if I've outsourced to a operational staff, a managed service in a particular region, and that region is getting hit hard, what am I going to do? And so we've had actually some pretty interesting, creative conversations with clients around how to approach that, right? Whether it be outsourcing something that they are doing internally, just to spread out the risk, or if they are outsourcing, how can they either work with their provider to possibly do a dual location strategy, or actually hire a secondary source to have as a backup. So we have seen a spike in managed service type discussions, because we kind of have we offer both services, so we've actually seen an increase in the managed services area.
Great. Well, thank you very much. Thank you all. We've come up to time. So thanks to Rob, Ross, and Linda for your insights, and also thanks to SmartStream. Our next webcast on data and investment decision making in the aftermath of Corona is on Wednesday, June 24th, where we'll discuss some of the key challenges complicating investment decision making in the current market conditions, and also how investment managers are using data for investment decision making. We hope you can join us then. And again, if you have any colleagues who would like to join, please put them in touch. Thanks again and have a good day.
Thanks, everyone.
Thank you.
Thank you all.